The visual signals of candlestick analysis are very simple to identify for the candlestick investor. For example, how long is this downtrend going to last? Well, now we're in the oversold condition. Where would be a logical target uh, bullish reversal? We can see exactly what was happening at the 200-day moving average on the Dow. We saw a bullish harami. And knowing that a bullish harami pretty much tells us the selling has stopped, that'd be a good place to start watching for a bullish reversal. One index alone might not tell you when there's been a reversal, but seeing that there was a big bullish engulfing signal yesterday in the NASDAQ, followed today by bullish confirmation and a close above the T-line, again with stochastics in the oversold area, it tells us the probabilities the downtrend is over. So that doesn't necessarily mean we put our full weight down on the chairs. We want to make sure that the bullish confirmation stays in progress with continued upside trading staying above the T-line. On the other hand, if we see another sell signal, and especially closing back here, now we can make a much different assessment. But right now, the probabilities indicate that in the oversold area, starting to see buy signals, that there's a good probability you could come back up into that trend channel. We can identify the patterns, such as a fry pan bottom in our recommendation on ZS. And we can see what the trajectory is. We also notice that it's supported right on the 50 with buy signals, making that much higher probability that we're in the right direction at the right time. So this is nothing that's hard technical analysis. If we can recognize a pattern setup, we know the very simple rules of staying in this price move. We stay long as it stays above the T-line. Candlestick patterns also tell us which stocks or which price moves have the strongest potential. Our recommendation on AVAV was based upon a kicker type signal, then the pullback, and then what we call a bobble breakout. Notice that when they pulled it back, the profit taking, they couldn't close it below the T-line, and when they came back up through the 50-day moving average, which had been acting as a resistance level the first time, that tells us the bulls are in control. There's a lot more upside. The anticipation of a lot more upside is based upon the fact that our initial signal was a kicker type signal showing us there was new strength coming into this price move. The reliance on patterns produce not only high probability trade results, but the price move usually produces much stronger price results. Once again, notice our bobble breakout. HEA was recommended because notice the kicker type signal that came back up through this resistance level, creating what we call a bobble breakout, which is a more defined J-hook pattern. If you took the 200-day moving average out, you basically have a J-hook pattern. The fact that we can identify where the exact selling was and where the buying came back and they broke back up through a resistance level, we know the results of this type of pattern. That if this is wave 1, this is likely going to be the same move for wave 3. Candlestick analysis is nothing more than the identification of what investor sentiment does time after time, producing high probability results. That'll be it. We'll see you in the chat rooms.